Welcome to Stock Trading Beginner Series, Part 4, Placing Your First Trade. Okay, you've opened your account, funded it, and now it's time to pick your stock and make your first trade. When choosing your first stock to trade, you'll want to start with what you know. Any background or expertise you have on specific companies or any news you're aware of, you'll want to use that knowledge. Look for volume and liquidity. Focus on stocks with active trading. Check the stock price and volatility, gauge the risk, watch the market movement, and avoid penny stocks for now. They're just too risky. Let's walk through the exact steps to search for a stock and place your very first trade. The real deal. First, open up your trading platform. I'm using Webull, but this works similarly on Robinhood, E-Trade, Fidelity, or wherever else you trade. Go to the search bar at the top and type in the ticker symbol. Let's say we're starting with QBTS, that's D-Wave Quantum. You would type QBTS into the search field, and tap the name or ticker, and it'll take you to the stock's info page. This is where you'll get the bigger picture. You'll see the current price, the day's high and low, volume, which is how active it's being traded, and a candlestick chart that shows how the price has moved over time. I recommend looking at the daily chart and the 5-minute chart to get a good idea of patterns. Look at the chart and ask yourself, is the price trending up or down? Are there any big spikes or dips? Is the volume consistent? Once you've decided on your first stock to trade, something with solid volume, decent volatility, and not a sketchy penny stock, the next thing you need is a game plan for managing risk. That means setting a stop loss. A stop loss is your exit plan. It's the price where you say, I'm out, before a small loss becomes a big one. So how do you pick the right stop? Here's a simple method. Look at the chart, find a recent support level, an area where the stock has bounced before. Set your stop just below that level. So if a stock is trading at $10 and bounced off of $9.40 earlier in the day, you might set your stop at $9.30. That gives it room to move, but protects you if it breaks down further. You can also use a percentage rule. Maybe you don't want to lose more than 3 to 5% on any trade. In this case, you'd set your stop based on your risk tolerance. You can also set up trailing stops, but we'll get into those more later. When you're ready, hit the trade or buy button. Choose your order type. A market order buys at the current price instantly. And a limit order lets you set a specific price, which gives you more control. As a beginner, I recommend limit orders to avoid slippage. Enter the number of shares, review your order, then hit submit or swipe to confirm. You've officially placed your first trade. Now you're in the game. But remember, the goal isn't just to buy, it's to manage risk and learn. We'll talk about that in the next step. I'm Market Maven. Follow along for more financial training on personal finance and stock trading and daily tips and stock picks.